Hey guys, Mike here. So, oh boy, what a volatile day today, which I'm going to get into with you and just show you how volatile it was with the swings back and forth. We're going to get into what some big buyers are doing, what some retail buyers are doing as far as puts and calls are concerned, because tomorrow is weekly expiration and stuff. And then go into some other things and really look at the charts here for a second. But it was so volatile that I was actually trying to get my morning news brief done that I send out on the Patreon and Discord and stuff, and I had to change this 3 times. It was like from red to green, and finally I said the hell with it, I'm just putting flat, and just so I can get it out before the opening bell. And then of course, as soon as I do that, boom, it takes off, goes into the green, goes up almost 1%. This is the 3-minute chart, but I mean, look at this swings you got up here, and we're talking about, you know, like between 0.8 and 1% swings, like every 15 to 20 minutes is what it felt like. But it was just crazy. I mean, it was all over the place. And I'll guarantee you some scalpers made a killing today. Because, I mean, you just draw this trend line. It bounced off of it every single time on the top. And then once you discover it's in this channel, once you've kind of looked at it, you can sit here and just trade off that, or go to the bottom here and draw on the bottom, and it just traded in this channel all day. So if you just put it on a 3-minute chart, man, you were making a killing scalping this today. It was crazy. And then when we look at the daily here, you can see that trend line that comes right down the middle is basically the middle of the channel. Right now it's just hugging it. That's all it's doing. And this is obviously just one of those trend lines that's bounced off of for support and resistance many times that we've gone down in this descending channel. And then switching over to the 15-minute, you can see the rejection. We hadn't got back up there, still hadn't filled that gap. And when we look at this, I did want to move this trend line right here, because if you also look, this is the 21 EMA. And you can see it's bounced off it multiple times. So you can just say it's a trend line, the 21 EMA, you just can't see it with the trend lines. I wanted to show you that. But either one, you know, a lot of resistance right there, like I said, and a lot of resistance ahead of us. But, you know, going into where we're heading or whatever, you got to look right here and say, a lot of people are thinking if we do continue up, we get through this trend line, we'll probably test back onto that. And then you got the descending trend line, and then another trend line that has been very resistant, or a big resistance to this market. And so 3,900 are what a lot of people are targeting if they're looking to try to start adding and going short on this market. That's what they're looking at, because I think it's going to take a minute to try to get through those 2 levels. And so, you know, we'll see what happens. But a lot of people, I think I've heard, are really targeting at 3,900 level if we get there, which is only about almost 3% away. So it's not even that far, but you can see now that shorts have covered in that frenzy, how hard this market has been in the last couple of days and how volatile. And please hit that like, subscribe button and share the video if you get a chance. I certainly appreciate it. And that kind of leads us into some other things I want to talk about, which is, you know, where is the overall market going? If we start to head down, why would we head down? Where could we head to? That kind of stuff. What's the fall, you know, the actual bottom that could be? And the truth is, there's a chance we're not even that far away from it. I think people think we're a mile away. But when I look at these charts, I mean, if you look, the big thing is, obviously, you got the NASDAQ 100 sitting on the 200, right? You know, moving average. That's a big one. It's a big support. And you can see why it's so big is because we haven't broken since 09. And so that is a huge, huge support level. So if that breaks, yeah, you can bet money we're definitely going to head down. That's for sure. I mean, again, that's why a lot of people took a lot of bets and this market moved so fast, because people said, wow, this is a great risk reward right here, okay? And if you look on, you know, even the S&P, for example, yeah, we broke it in 2020. But if you go back prior to that, again, it was, what was it, 2011 was the last time we almost, or kind of broke through, slightly broke through. And so that's another one, a big trend line. And then if you go right here to the NASDAQ itself, you know, you got this channel that's been trading in for over a decade. And some people think we're going to the COVID lows and all this other stuff. But the truth is, we're not far away from it, right? I mean, we're only about 12% away from it, which also interacts with that trend line I drew right there that it's bounced off of and held a support many times over. And 12% is just not a lot right now. Not when you're in a bear market. We're already down 30-some%. So, you know, that's something to look at. But you see how far back this channel goes. You can see how far back these trend lines go. And so, you know, long-standing trend lines, support lines, resistance lines, like, you know, charts love and stocks love to trade off these things. And so, again, if that's the bottom, that's not really that bad. I think a lot of people would absolutely love it if it only went down 11% and then proceeded to bounce up. And, you know, if we go over to the S&P, you're looking at the same thing, right? I mean, the COVID lows, which intersects with this trend line I got drawn right here, it's only like 10% away. If you go to the mid trend lines, 15%, the bottom's around 20% more. And so, yeah, it's a big drop. I don't really know how in the S&P we get there without oil breaking. And now when you see the cut, you know, being done by OPEC, 2 million barrels a day, I mean, I just don't understand how the S&P finally bottoms out without oil crashing and burning. That's what I don't understand, just because if oil starts going back up, that's going to bring everything else back up. And so those stocks, you can see they're already green again today. And so I don't really, you know, don't understand that one. But who knows? I mean, maybe it does. But again, I've said that for months now. I don't, until oil comes down. That's why you see the S&P, it went back into bear market territory only because you saw oil and commodities just plummeting, right? Especially oil. And so that was the big one. But now with this OPEC deal, I don't know. I mean, you see it green the last couple of days. It would make sense that it would continue to move up for a cut in supply like that. And the other reason is too, which I'm going to go on this tomorrow for you guys, is when people are predicting a recession now, right? Because we're in earnings, and if, you know, people are saying well, the official recession won't be till mid-2023 or even fourth quarter of 2023, why is oil going to drop that much then? If you're not telling me the recession is not till way off, because we've been in a technical recession, but now Q3 GDP is supposed to be positive, right? Which proves that it was a paper recession. I mean, I think employment being so strong as it is kind of proves that in itself, even though I know it's a lagging indicator a lot of times. But with companies announcing, and understand employment is actually going to go up or down, because what's happening? Holiday hiring. You know, Amazon's hiring like 100-something thousand people. Walmart's hiring. All these companies are going to start hiring, and those are temporary jobs, but still, they're jobs. And these big companies announcing they're raising wages and stuff. You don't do that in a recession. That's the opposite happens, right? And so we got big holiday season coming up. And before I get into, you know, all these people hedging and what they're doing, you know, keep an open mind. I was thinking about this today, and this is more of a debate. You know, I wanted to start really. And I'm a data-driven person. I believe in being that way. I don't believe in just being set, you know, and this is the way it is. No matter what happens, this is the way it is. I just don't believe in being that way. I teach my son to be open-minded about things. And so that's the way I'm going to be. And I'm sitting there thinking, and this will make more sense in the video tomorrow, and I'll go in more detail. But food for thought is, if an official recession really, let's say earnings comes out and people are hitting guidance and they're not lowering fourth quarter guidance, well, that means earnings are a whole lot stronger than people think, right? We still have a lot of savings. We still have a lot of equity in our homes, of who own homes and bought, you know, well before the last 3 or 4 months. And we're a lot stronger. The banks are more capitalized than they've been in a long time. And so let's say earnings is good. Let's say, you know, food for thought, that on the 13th, when CPI comes out, it's lower than what people think it's going to be. Let's say it's 7.2 or 3 or whatever, but it's lower, which means it will still be kind of trending down, especially month over month, which is big. Oil doesn't spike and go to 100. Gasoline starts to rise a little bit, but not a whole lot. You know, then you're starting to think to yourself, well, wait a minute, that means the economy is stronger than people think. The market's a crack addict, or drug addict, I should say. And so its drug of choice, of course, is, you know, free money and all this, stimulus, that kind of stuff and everything. And it's looking for anything it can to move up, anything, right, just to be able to move up. Well, when you look at that, if earnings come in stronger than they think they're going to be, let's say unemployment tomorrow, which comes in higher, let's say it does go up to 3.8 or 3.9, whatever, higher, and CPI comes in lower, well, all of a sudden, the market's going, oh, look at this. You know, because why? The Fed would go, oh, unemployment went up. We know job openings came down. Well, what we're doing is working. Well, maybe we don't need to do 75 basis points in November. Maybe we only just do 50, right? And the market would just, you know, it would be giddy, wouldn't it? I mean, you can just see it. You see the little news and bad news that's moved it. Well, what about that? That's actually, I mean, I won't say it's good news for the economy, but, you know, for the stock market, it's like, oh, you know, so keep an open mind on that. That's the thing to think about. Because really what I'm thinking about is listening to some people I respect, that if you're telling me an official recession they're projecting the end of 2023, that means the recession didn't begin until second and third quarter, right, of next year. That means you still got fourth and first quarter, which should not be negative GDP, right? And earnings holding up, supposedly, if that happens. Again, I don't know if that's going to happen. I'm just saying, food for thought to think about if that happens, where do you think the market's going? You know, it's going to go higher is what it's going to do. And most likely, I'd say when it goes higher, I mean be in a range is what I'm kind of seeing. I'll do a little more detail on this for you to see it, but actually be in a range like this, a big range almost, where it's very volatile, but it, you know, I'm not saying going all the time near highs or anything, but going up. And so if all that plays out, it's a lot of ifs, right? But I'm just thinking, man, I'm listening to everybody talking about where they think the forecast is going to be for the real recession, and I'm like, man, it doesn't seem to be first quarter 2023, don't seem to be fourth quarter either, right? And so I'm just saying 6 months is a long time when you're talking about earnings and things like that. So again, it's going to totally depend on the consumer, us, like if we are spending or not spending. Okay, that's really what it's going to depend on. But just also just all of this money, we've never seen this much money on the sidelines ever, never have. And boy, when that money starts to move in, and you know, that's all I'm saying is when it starts to move in, okay, and now that I know if oil is going to stabilize and not tank, I don't know how the S&P does continue to bottom out, right? Because so many of the stocks are so just beat down anyway, right? I was waiting for oil and the other ones to go, and they started to go, and now they're stabilizing. So, you know, that's a whole nother deal. But, you know, looking at what people are doing, I'm talking about, and I'll talk about this in a little more detail. You know, if you can't see this, let's see here. This is the puts. This is the calls. What do you see here? Which one outnumbers the other? Is it even close? Puts, calls, puts, calls. I don't think so, right? I mean, that's a boatload of puts people are loading up on. And you can see for some reason, really at that 4,000 mark, like really loading up on calls and puts right there. But you know, you just see a whole lot of puts, and you see retail option traders are putting in protection, you know, up to $18 billion spent buying put options to open. And so a whole lot of hedging, but also the fact that even big buyers, like the big millionaires and hedge fund and stuff, are buying a lot of puts, but they're not expiring soon. And a lot of them, you know, are like out of the money. And so it's like, okay, it could just be hedging, you know, could be selling puts. I mean, you just don't know. You just see the puts themselves, but I don't see where it says they're selling or buying them straight out. And so, you know, again, when you get that bearish, I mean, maybe they're going to be right. Maybe we're heading south, but looking at some of those puts, how far out they are and the strikes and stuff, it's like, I don't know. That's an interesting one to me. So, you know, let me know what you think down in the comments, you know, what people are doing. If you're buying a whole bunch of puts as well, you know, I think a lot of people are waiting until 3,900 to actually really start trying to short the market. But again, I'll go into more detail tomorrow when I let you see an interview with one of the, as far as I'm concerned, one of the greatest investors ever, and he's not Warren Buffett. This guy's a lot more aggressive. So, but he's a billionaire doing it. So I always say, if you get to being a billionaire, doing investing and trading, you know, I got to take my hat off to you no matter who you are, because that's a pretty good accomplishment, right? And so you tend to want to listen to people like that because they have done this for a living for a long time, and you know, sometimes you just want to hear that stuff. So, you know, but anyway, that's where I'm at with this. Kind of caught you up. I'll go into the liquidity issue when it comes to bonds and all that stuff tomorrow, just because I didn't want to put it in here and drag the video out to 25 minutes. That's a whole nother issue we'll have, which could actually force the Fed to pivot, believe it or not. We'll go into that in a lot more detail as well tomorrow. So anyway, hope you guys have a good one, and I will see you later.